Hi, Boothy. Can you believe we're back filming our first Boothy's Bites for 2024?
I know. Happy New Year, everybody. I feel exhausted already. It's only been 2 weeks here, and my list of things to do has got pretty long. But I think we've just spoken about some better things, about where we're going camping and having holidays this year. They're the better things to do lists. Anyway, cool. And how are you, Jackie? You well?
Yeah, I'm good, thank you. I had such a good time away at my parents' place down in '𝐴𝐿𝐴 and then down on the Gold Coast for New Year's. So, yeah, I'm similar to you. That to-do list is definitely growing. But, hey, let's hit them. What did you get up over the holidays?
Yeah, so I was very lucky. So my kids are a little bit older now, so they don't want to hang around with dad as much, but he's cool. So, a bit of downtime, family, Christmas. I cooked Christmas turkey and, some Yorkshire puddings for the family, which was great. And then a bit of work. So my girls are working through the break. So I did a bit of work on the party boat as well. So that's hence why I look like a little bit tanned and burnt. So I probably need to get better at my Factor 50 application. And then got away for a bit of a sail with a couple of mates, which was beautiful. So ticked some nice boxes. And Kelly, my wife, she managed to go to the Gold Coast without me, with my boy Will, and she had a great holiday there too. So look, really, really nice, and excited to be back for 2024 too, for sure.
Yeah, awesome. Okay, well, let's jump in for 2024, starting with what's the latest news within the walls of the Reserve Bank of Australia?
Yeah, well, so I mean, look, they haven't had a meeting for a couple of months, which has been great, and we felt, last year, at the end of last year, that the sentiment with regards interest rates was sort of slowing for increasing interest rates. We had that sort of late call last year to increase by 25 basis points, and that inflation data has been sort of closely watched. Really nicely, only last week we got the inflation data in, I think it was for November, and again, that came in lower than expected, which was down at 4.2%. The RBA looking for inflation to be between that sort of 2 and 3%, so there's still a bit of work to be done, but certainly with the increases that we've had last year and that sort of the slowdown of the prices that we're seeing right now, I think we should drift by mid-year to pretty close to that sort of top end of that band at sort of 3%, which is great. So we meet on, I think it's in the 5th of February, the next one is, which is cool. So we are expecting, and the economists predicting, that no rate change there, which is good. Again, that sentiment seemingly that is, the next meeting will be March, and I believe that that should be it then. And then we take a break between April. So between April, there's a couple of meetings which they're stopping doing. So certainly between April, there's nothing, and then May, June they catch up again. So really, for me, the sentiment I feel is that we're probably right at the top end of this cycle now. I don't think we're going to see interest rates decrease anytime soon, but certainly by the second half of this year, we'll have to start looking at the data a little bit more closely to see what the next cycle of interest rates could be. And a lot of the time in these situations, the RBA has tightened up very quickly and actually moved those interest rates up extremely quickly. Maybe they have to sort of taper that off a little bit and give us a little bit back. Interestingly, though, we had Albanese came out yesterday and has reaffirmed that the tax cuts are going to be in place for the tax year 2024-5, and that obviously puts a bit of cash back in the system for those lower tax rates and lower tax brackets. So again, that is actually putting cash in the system, whereas the Reserve Bank are taking it out, and we sort of have to figure out what that impact on spending and things will be as well, because obviously that creates the inflation. So long-winded, we're on hold, maybe have two breaks, and we'll dig a bit deeper in the next couple of months.
Sounds good. And so what are some of your favorite lender offers at the moment?
Yeah, so I think with some of our larger lenders, they don't sort of advertise their specials. So, myself and the team here at Lydian are fighting really hard with discretionary discounts for our clients at the larger banks. So I'm talking now CBA, Westpac, ANZ and NAB and their greater sort of groups. So we are getting some good discretionary rates. Typically, the larger banks want larger deals, lower loan to value ratios, so they're pricing those really favorably. Some of the more, the smaller lenders, we've got Heritage Bank, which have got a great variable P&I for homeowners at 5.99%, which is really, really cheap money. That's a great rate and really attracting lots of people to them. And I suppose then we've got a swag of lenders in that 6.09% owner occ. So we've got Adelaide Bank, UBank, Bank of Queensland, Firstmac, all trying to attract that sort of low P&I own home. Again, it's for low loan to value ratio loans as well. So 6.09% is sort of the median. For your investors, We've got Heritage again, they're P&I at 6.24%, which is a pretty cool rate. And so interest only rates, they're typically a little bit higher. And St. George Bank have got a 6.60 interest only rate. That was a special we just got before. So again, if it's a discretionary request, we're getting some pretty good rates there for interest only. So, and what I would say is we're trying to get people back into that sort of budgeting and housekeeping of managing their finance. So making sure your investment debt is interest only, making sure your home loan, we're concentrating on repaying that, getting some redraw, getting ahead of the repayments there, using offset, etc. Yeah. So that's our strategy.
And so, speaking of the housekeeping of financials, how is Lydian helping our clients kickstart their new year?
Yeah, so I think importantly, we've all got to have a things to do list. And as much as it probably upsets people opening the financial side of things, because you go, okay, it's been really hard and I don't really want to think about it after I've been having such a good time on holiday. A lot of our clients are coming back and we're doing reviews. So again, simple things. Let's make sure that you're getting a great rate at your existing lender. Okay, so we'll go into bat for you there, fight for a better rate for you. We are looking at clients who now are coming out of that difficult period last year where you really weren't sure about, where interest rates are going. We have a bit more confidence now. We probably had some time to sort of talk about what our personal wealth creation plans are for 2024. So clients are coming to us and going, right, I want to know with certainty, what can I borrow to buy another property, whether it's my first home or an investment property. So reviewing valuations of property, making sure, that we've got an affordable lender as well. Got a bit of work because there's a massive disparity in affordability with all of our lenders right now. So with what you can borrow at one lender can be about 20% or 25% different at other lenders. So really working hard with affordability. Other one, a few people have spent a little bit of money on the credit cards lately. Holidays have caught up on a credit card, some dirty spending for, big gifts and things like that. So we're doing some debt consolidation. So getting rid of those Citibank or other credit cards at 20% and putting them into the home loan at sort of 6% and getting back on track. Same with car loans as well. Sort of, people get caught up with personal loans for vehicles and things like that. So a bit of debt consolidation, getting, again, that budgeting and repayments back on track as well. So yeah, check in, have a review meeting, whatever your plans for 2024 are, we can talk you through it. And, then we've got some things to do as well with that, with next steps. Yeah.
Yep. Sounds good. I might have to give you guys a call.
You're not speaking to me.
And so I'm hearing a lot about self-managed super fund lending at the moment. Can you tell us more about that?
Yeah, that's an interesting one. So again, as interest rates have risen over the last sort of year and a half, and sort of budgeting and expenses for your personal household have increased, because of the weight of the repayments for that debt, people are still aspirational. They still want to invest in property, right? But it may well not be as affordable in your personal name to buy that investment property. However, you've got a good job with the contributions which are going into superannuation on a monthly basis or regular basis with your wage. And secondly, you might have built up quite a large portfolio in super. Property as an asset class is a lot of people are more comfortable in that rather than shares and funds and things like that. So aspirational people making a decision this year who are going, right, well, I'm a bit tight to borrow in my personal name, or I don't want to do that and stress my personal finances, but I've got a large pool of funds in my super. I want to diversify some of the investments I've got away from funds and shares into direct property. Self-managed super funds is a good way to do that. It's not for everyone. There's a lot of sort of rigor around how you borrow on that, and we'll talk to a specialist broker, and also we can get you advice around to doing that. But in simple terms, the contribution to your super, the rent income that you get from the property, and the lower loan to value ratio of borrowing that you typically do in that environment, the structure of buying property in this manner can actually get you an affordable asset which will repay the debt off over sort of 15, 20 years, which wouldn't be unreasonable. And it's just another way to invest in property. So again, reach out. It might not be suitable for you right now, but we can plan around what steps we have to do to actually get you into a lender. But there's lots of lenders who've got that appetite right now. Interest rates are slightly higher. They're sort of 7%, maybe 7.5% principal and interest. So you do have to pay a bit of a premium for that. But for any people who want to get involved in property in 2024, potentially would like to look at the options between personal name and self-managed super funds, we've got some specialist brokers in our team who do this very, very well, and also give good advice and certainly give you clarity and transparency about taking those next steps as well. So again, it's an option for aspirational accumulators. Yeah.
Amazing. And so what about a property update? What's the latest there?
Yeah, so well, we've gone through Christmas, so I know sort of clearance rates and auctions were a little bit down at the end of the year. I'm really keen to see what the listings are going to be over the next couple of months, because I think last year people were uncertain about, one, buying property, and two, listing their properties because property prices were going up. I think property prices now will probably stabilize a little bit. We've seen that on the sort of higher end of property markets, and the clearance rates for those higher value properties have been a bit tough. We talked before about sort of that lower end of property up to sort of $1 million. That's really attractive to first home buyers with all the benefits. We've got that new Queensland benefit come out just recently. I think it's $30,000 of cash for a first buyer, which is really a big incentive and a big cash injection to your deposit to buy property. So I think that sort of lower end of purchase price between sort of your $500 to $1 million is going to be well supported, and we'll see a bit of an appreciation in that sort of end of the market. So you know, your lower end apartments I think will appreciate and will continue to do well. The higher end of your sort of $2.5, $3, $4 million homes may struggle a little bit this year. So, but just be interesting to see what listings come on the market, because we've got the sort of second half of summer coming right now as well.
Yes, sounds good. Stay tuned. And so my last question, what's happening at Lydian HQ? Is everyone behaving themselves now that they're back at work?
I think so. Well, I mean, we've had a coffee catch up this week with a really unique lender called Vados. So that's a private lender. So we've all been doing a bit of learning. Everyone's been coming back with all of their plans. So I've had some really good meetings with a lot of the brokers talking about what their business plans are for 2024. How they're going to reach out and help their clients and do reviews. Again, look at repricing and reviews for existing clients, which is really cool. So we've dusted off. We're back in business. Everyone's back working right now, and really excited for this year. We've got no new recruits as yet, but we've got a few people we're actually interviewing and supporting with potentially onboarding with Lydian. So that's really exciting. Our operations team are doing great. They've come back and they're doing lots of reviews for the guys. Our marketing team have got plenty of activity for branding and sort of engagement documents for clients. So yeah, everyone's been really, really busy. And obviously, Jackie's back, Roxy's back, the whole gang's back. So, and Joe Wynn's got a list as long as her arm for things to do too. So yeah, we never really had a break.
We're all ready to hit the ground running again.
And we've already given out 2 Lydian trucker caps this year. Whoa!
Woo! Can't wait to see those photos. Well, Boothy, thank you so much. Thank you, everyone, for watching, and we'll see you next month.
See you, Jackie. Ciao.
Bye.